Hi, I'm Chrissy.
And I'm Jess, and this is Financial Progress.
Welcome, everyone. Before we begin, I just want to give a little disclaimer that this is just a conversation between friends. This is not financial advice, and please seek the help of a financial professional before making any financial decisions.
Thank you. Welcome, Mabel, to
Hi,
Financial
Welcome.
lady.
Progress.
Thank
Yes.
you. I'm so excited to be here. Yeah. So I always love talking about this topic. So thank you for inviting me and to chat about a
Yes.
little bit about this important topic.
Yeah,
Yes.
and thanks for saying yes. So
Yeah.
today we have a special guest. We have Mabel, who's an investment educator from Girls on the Money. And today we're going to talk about how to invest for any budget and also how important it is for our future and our community. But before we get into the topic, we would like to know more about you. And we want you to be able to tell us, like, what was your financial progress over the years?
So, hello, I'm Mabel, I guess in Spanish. I was born in the Dominican Republic. So I moved to the United States, specifically New York, when I was 9. So I've been here most of my life. But I'm an immigrant, so I know the struggles of, getting to a new country, trying to figure things out, living on a limited budget. So my family, I always say that my parents, especially my dad, did a phenomenal job teaching us. I have a sister who's younger than me, teaching us the basics of personal finance in terms of saving money, being cautious with credit cards, and things like that. So I did learn that by example early on as I was growing up. But in terms of investing in the stock market, that's something that I never even heard of. It was never done in my family. I didn't know anybody that
Mhm.
invested. I learned about the stock market as a senior in college. So I went all the way through high school. Like I didn't have any investing clubs in high school. Like some people that I meet have, like they were introduced at a very young age. I wasn't. So when I learned about the stock market as a senior in college, I just fell in love with it and I made it a mission to educate myself about it. So I would say a lot of my financial progress over the years, a big pillar of that has been investing my money. I worked my 9 to 5s and I made money like a regular person in my 9 to 5. But it wasn't until I started to invest that money that I really saw the power of what the money can do for you. Because you can make 6 figures, which is great. But if you're not investing that money, it's just going to leave your hands. Like you might save it, yeah, but it's not going to grow. So it makes a big difference when you invest it. So I would say that was my financial progress when I was younger, all the way through now.
You had a pretty good foundation.
Mm-hmm.
Like the fact your parents showed you what you needed, and then in college you still was able to like learn about investments. I didn't learn until 15 years after college.
Wow,
So
look at that.
I
Yeah,
think it was,
it's
yeah.
wow.
So
That's
so it's great
definitely
that you was able to have that. I'm amazed.
wow. Oh,
Yes,
thank you. Wow,
starting
I thought I
early.
was, I thought it was like, because I met people like, oh, I started investing when I was 14. I'm like, what? Like, I didn't even know that existed. But yeah, you're right. Like,
Wow.
most of us,
It's
yeah,
impressive.
that
Yeah,
does
yeah.
happen, especially in certain like cultures and things like that. So in communities that have that kind of network.
Mhm.
But you're right. Like, we're not exposed as Latinas, as minorities. We're not exposed to this
No.
sometimes at all. We might get to our 50s and be like, oh my God, I didn't invest 1 cent, and which is fine. You can always start learning, and it's never too late. But yeah,
Yeah.
that's the reality for a lot of people. So I'm
Yeah,
glad
yeah.
you eventually found it. So that's awesome.
I said 15 years after college, but I'm at high school, 15 years after
Okay,
high school.
cool.
I always say I found out really, really late because I feel like I lost out on so much money. But the good thing is that we know now, and all we can do is just keep going from here. So,
Forward.
And there's way to
yeah,
catch
yeah.
up. So yeah, there's never too late.
No, no. So, yeah. So I'm really proud of you. I'm really
Thank
proud.
you. Thank you. Thank you, ladies.
So, can you tell us how to invest for any budget and also how important it is for our future and community?
Yeah, so a big misconception people have, especially in our culture, is that you need to have thousands of dollars in the bank to start investing. You need to have at least $100,000 or whatever crazy number, and that's all false. I started investing around 2008 for the first time, and at that time, some account brokers did require you to have a minimum. Like some of them were $500, some of them were like
Mm.
10,000. There was account minimums back in those days. But now, fast forward 2024, that is a thing of the past. So literally, if you only have $25 or $20, you can, or $0, you can open an investment account. and start building it from scratch with any budget. So let's say that you can only afford to send $20 every 2 weeks to an investment account. That's more than enough to start setting a foundation. So I would say don't hesitate to invest because you think you have to have X amount of money first before you do so. I guess the best way to invest with any budget will be something like the S&P 500, which maybe your audience have heard of before. That's the best way to get introduced into the stock market and have exposure to the best companies in the world through one single fund. And you can find an investment like that for a couple of $100s. But the reason I say that you can invest with any budget is that there are accounts. I could name them if you want, specific investment accounts that allow you to buy partial shares of this investment. So if you only have $50 to invest in the S&P 500, even though it costs $200, you can allocate $25 to it and build your position that way. So there's ways to do so. Don't let a budget or a specific dollar amount prevent you from getting started.
So if there was like someone who's like clueless, has no idea, what would be like the first steps that would help them start investing, even if they have a very small budget?
Great question. So first of all, you have to open an investment account, and some people are under the misconception that they need to walk to a bank and talk to a person at the bank to open an account. That is not true. You can open an account from your house, from your phone, from any place where you have, from the library. Well, I wouldn't recommend doing that because it's personal information. But I mean, anywhere where you have internet access, preferably in your home, you can open an investment account. And like I said, you don't need to have any minimum dollar amounts to open it. So I think the only requirement if you are in the US is that for most accounts, even though there's some accounts that have loopholes, you do have to be 18 or over and you have to be a US citizen. But there are some accounts that have flexibility on immigrants and things like that. So I would encourage you to look into it if you fall into that category. But again, you can open it from your home, and the accounts that I suggest, and again, this is not recommendations, but the best accounts out there are Fidelity, Schwab, Ally is another good one. I would say those top three. And if you were to choose one, I would say just do Fidelity. They have a lot of features and a lot of perks that some accounts don't have. And like I said, it's a quick application process. It might take you 10 minutes. Obviously, your name, your social security number, because it's a financial account, things like that, your address, whatever. Once it's open, you want to fund the account so you can link it to your bank account, whatever account you want to use. So again, you can say, I'm going to link my accounts and I'm going to transfer $50 or $100, whatever it is. And then you have to invest that money. So what I would say, you can Google S&P 500 funds and you're going to get a million results because there's different institutions that create versions of the S&P 500, but it's essentially the same investment across the board. If you buy a S&P 500 from Fidelity, from Vanguard, from Schwab, from iShares, they're all the same investment. What you're going to see is that there are different prices for different reasons that I'm not going to get too technical about. But if they're the same investment, so in one year the S&P 500 goes up 10%, all of those funds across the board are going to go up 10%. So you don't miss anything except for like there's different fees and things like that. So find which are the cheapest. The cheapest one I know because I do this for a living. The cheaper ones right now are either from Schwab or from Fidelity. They're the most affordable. If you look at Vanguard's or iShares, they're in the $500 already because the market has been so good, especially this year. The Fidelity one is a couple of $100s. The one from Schwab is, I think, is under $100 or maybe a little bit higher. I haven't checked in a little bit. But yeah, like I said, just pick one of those and, whatever money you end up transferring. For example, an account like Fidelity will allow you to invest those $50 into any of those funds that you select. So I think the technical part of it will be getting used to what the interface looks like where to click to buy and where to click to sell, things like that. But that, you will learn by looking at the account and practicing and things like that. I know I went through a lot of steps, but it's really simple. And I hope it made sense to your audience. So it's things that you can do from your home. Start with the S&P 500, start with whatever dollar amount you want to start with, and then just build from there. And as also educate yourself, you don't want to just jump into investing blindly. So I highly, highly recommend reading books about investing, maybe following people on social media that you can trust. Be very careful because there's a lot of scammers on social too, trying to sell you crypto. Please don't go that route. There's a time and place for that, but not as a beginner investor. Please don't fall into the trap of people scamming you on your DMs, like, please don't. Just know that you can open an account on your own, do your own due diligence to select legit, high quality investments that are proven by years of history. Like, don't go the scamming, like gambling type of way. But it is something that, again, like, take time to educate yourself how to invest the right way, and just build on that. Like, you don't have to be an expert, you don't have to have an MBA in finance to master this. You learn by reading, by listening to podcasts like yours, for example, or others that you find that you enjoy, to learn from people about this topic, and just absorb yourself in that world so that you can really make smart decisions.
Yes. Speaking of
Yeah.
Fidelity has a teen account. I think it is 13 to 17 years old. And
Oh,
I
wow.
think it's fee free for
Wow.
them as well.
Okay,
That's
awesome.
amazing.
Okay, cool. So yeah, that's an
Yeah.
option for
So
people that have kids and want to get them started. Yeah, another great perk.
it kind of like teaches them
Yeah,
things
to
that
get
we
into that
didn't
world.
know.
Yeah, no, we didn't get that advantage, but now we can teach our kids or nieces and nephews, whoever it
Hmm.
is, to get started early. So
Yeah,
Exactly.
definitely.
Exactly.
So I just want to talk basic. Like, let's talk about, you mentioned like fractional shares. Can we just talk about that a little bit more and discuss like what that is? What does that mean?
yeah, great question. So fractional shares is a great tool because it allows you to invest in any investment you want, like any stock or any fund that maybe to use it might seem expensive. You can invest in that with any dollar amount that you have. So let's say, for example, I think Microsoft, like a stock like Microsoft, is like almost $500 per share, one share of the stock. But maybe you say, okay, I like the company. They're into artificial intelligence. They make a lot of money. They're a very solid business. I want to have some of Microsoft, but you don't want to put almost $500 in one stock. Maybe you only have $500 to invest, and you want your money to, you want to get the most bang for your buck, and you don't want to put the whole dollar amount in one stock. So with a fractional share account, which Fidelity is one of the accounts that offers that, you can say, okay, I'm going to put I have $500. I'm going to put $100 of this money into Microsoft. I'm going to put $100 into the S&P 500. I'm going to put 100 into Apple, 100 into Nvidia, 100 into, I don't know, what's another, Amazon. And you can have like a mini portfolio that's only $500 in like great companies, and like, and obviously the S&P 500 is in there. And again, I'm not recommending, I'm just giving you an example how an account that allows you to buy fractional shares gets you more bang for your buck, and you're able to divide your money any way that you want into different stocks and funds without having to worry about their price. So even if you see a stock like, for example, Costco, a lot of people don't know that Costco is like almost $1,000 a share. It's like nine something, which is like, to me, is like, I recently did a report on it because I wanted to buy the stock, and I'm like, oh my god, this is crazy. But hey, you can still own $50 worth of Costco or $100 worth of that. No, it's not.
Hmm.
It shouldn't stop you. Like, you can still have stock in any company that you want, even if you have $10. Like, it doesn't matter. So that's how fractional shares help you build a nice portfolio without having to have like a lot of money.
Yes, great. Perfectly said. Yeah, I just wanted to add a little bit in there. The price out there is for one stock. So depending on the percentage of money you put in there towards that one stock, that would be how much you own of those shares. So it could be like 0.1% of that share, or 10% of that share, or 20% of that share. So yeah, it depends on how much you would put in. That's very
It
great.
would, yeah.
And though you mentioned like cryptocurrencies, so like I have like a very small tiny share of Bitcoin because it's so expensive,
It is.
but it's
Yeah.
been growing that little bit.
Exactly. Yeah, great example. So even if you, like, for example, if an investment goes up by 10%, whatever, like if you only invested $50, those $50 are going to go up 10%. So your
Mhm.
investment is going to go by the same percentage that the investment grows in the market. It's just that the more money you have, the more money you're going to make, or the
Mhm.
less money you have, the less you make. But yeah, if you only have like a tiny fraction, that's still going to grow. Maybe not as much as
Mhm.
if you had more
It's
money,
not
but it's
high,
still
but
going to grow. So yeah, great point, Jess.
is there any like specific risks that you would like to share with them so that they are aware of risk with
Yeah,
investing?
yeah, I would say, first of all, always do your own research with any stock. A lot of people fall into the mistake of, their coworker told them to buy this penny stock, and they're like, oh my god, they put $5,000 in there, and then next thing you know, it's down to 1,000, like, or like down to
Oh my
500
God.
or even less. So just be careful to invest based on what random people tell you. Also, like I said before, the internet, you want to be very careful who you listen to. Like, a lot of people are there to scam. They might say, oh, buy this specific investment only to bring the price up, and then they're going to sell and leave you with nothing. Like, there's a lot of creative ways that people scam others. So always do your own research before you buy anything. And I would say, in order to have more peace of mind with your investments, always buy like quality companies. Like, if you're going to buy individual stocks, buy companies that you know are already well established, that you know make a lot of money, that you know are leaders in their industry, that are very strong businesses. Don't fall into the trap of buying like startups or up and coming companies just because maybe one day they're going to be the next Amazon, or they're the next Google or whatever. Yeah, we don't, like, maybe they will or maybe they won't. A lot of the time with these startups and these like very cheap stocks, most of the times they just go out of business. They disappear and your money goes with them. So be careful with that. The way that I suggest and I recommend approaching investing is always buy quality, always buy the things that are already established. If you want to buy the next, forget about buying the next Amazon. Buy Amazon right now. Like, no, don't overcomplicate yourself. That could be a mistake because, like I said before, these startups or like up and coming companies, even though they might seem cheap and they make a lot of promises, 9 times out of 10 they fail. So you want to be very cautious with that. I would say those are two big risks that I can think of.
Okay, thank you for that. Since you brought it up, can you talk about penny stocks?
Yeah. Penny stocks, I guess you can identify them by these are companies or stocks that sell. Like, I guess the official definition on by the SEC, which is the Securities and Exchange Commission, the entity that regulates the stock market, is that it's a stock that sells for $5 or less. But typically, penny stocks sell for like 25 cents, 50 cents, very minuscule amounts, and a lot of them are like in biotech or like in like interesting industry. Even AI is involved in there because some random company comes out of nowhere saying they're going to be the next chat GPT or whatever, and then they issue a stock that costs 25 cents. So you want to be careful with these very cheap companies. A lot of people buy them because they say, oh, I can get so many shares. I have $100, I could get so many shares because this is only 50 cents. But what they fail to see is that most of the time these stocks don't move because they're not really well known, so there's not a lot of movements behind the scenes in terms of buyers and sellers. Either they don't move, or they crash, go out of business, or if they do go up, you kind of have to be watching them like a hawk to get some money out of them because it's very stressful. You don't want to get involved in those things unless you have the time and the patience to be watching these little companies like a hawk. So there's a lot of risk involved. Another important thing about penny stocks is that they're not regulated. So something that a lot of people might not know is that most publicly traded companies, like the big ones or the established ones, or even like newer ones, in order for them to be regulated, they have to file applications with the SEC, which I mentioned before. Depending on, I don't want to get too technical, but depending on whether they go with the NASDAQ or the New York Stock Exchange, which are where their stocks are held. I guess that's a simple way to explain it. They have to file applications. They have to abide by specific standards. They have to provide every quarter, every year. They have to provide reports that are made public about how the company is doing. It's very, very strict. Like, they have a lot of regulations. And it protects us as the investor because we always know what's going on. That information is public because they're publicly traded companies. With penny stocks, I would say 90% or more of them are not regulated, so they can do whatever they want. They don't have to report it to anybody. They can take out millions of dollars for the account and only they know about it, nobody else knows. So there's a lot of, like, again, a lot of risk with that because of the lack of regulation. So that's something also to keep in mind. If you're investing in a penny stock, just know that, yeah, you don't have a say regardless with stocks because anything can happen. But especially with penny stocks is even worse because they're not bound to any standards or any regulations. So that's another thing.
Yeah, that's great information. For a beginner, would you suggest they kind of steer clear of penny stocks and just stick with the S&P 500 or?
Yes, please. Beginner, somebody that's been investing for 50 years, it doesn't matter. Penny stocks are way too risky. I mean, you can take the chance of putting your money behind one if you want, but just look at it as a gamble. It's not an investment. Just like you go to the casino or you go to Vegas or you go to like wherever to play cards. That's what investing in penny stocks is. It's not really an investment because there's so much risk involved and it's really like a game. So if you wanna say, okay, I found out about this penny stock and it looks promising, so let me put a couple of $100 in there, fine. I'm not gonna be mad at you, but just know that it is a big risk and it is a gamble at the end of the day. So, some people luck out, like gambling, some people make a lot of money in gambling. So it's not to say that you're not gonna make money, but 99% of people don't. So I would say just keep that in mind. I've been investing for over 16 years and not once have I put one penny stock in my portfolio. I've always focused on like things that are already established and high quality stuff.
Thanks for sharing that. It's important.
Thank you.
What is one piece of financial wisdom you like to leave with our audience?
I would say educate yourself. Investing is such an important skill. It's worth your time to take some time to learn it. The sooner, the better, but also it's never too late. So don't feel like if you're in your 40s or maybe your 50s or whatever, don't say that you missed the boat. It's never too late. The sooner you start educating yourself on that, the better. Because, like I said before, you don't want to jump into it blindly either. Like it's important to invest, but you also want to know kind of what you're doing. And it's very straightforward. You don't have to, build a portfolio of 50 companies. You can build a nice portfolio of maybe 5 to 10 companies to start with, and you build a really nice foundation and continue growing that over time. You just have to know how to do your research to kind of make the right decisions. But again, it's not hard and it's something that you can do. Anybody has the power to do it. Like, I'm an immigrant from DR. I didn't know anybody that invested in my life. And I kind of figured it out and it became like a hobby for me, like learning about it. And it turned into a passion. And a lot of people will find that once they start learning about it, they become passionate about it too. So just please get the ball rolling and you won't regret it. So that's my biggest piece of advice right now.
Thank you so much. Can you tell our audience where they can find you?
Sure. So my main account is on Instagram and it's Girls on the Money. I have my website too is girlsonthemoney.com. And yeah, so anything that I launch or anything that I have going on, typically I announce it on Instagram. And if you don't have Instagram or social media, you can always email me. It's hello@girlsonthemoney.com. And I'm happy to answer any questions or share any feedback or anything like that.
That's great. Well, thank you so much, Mabel, for agreeing to be interviewed today. And thank you for your time. We really appreciate it.
Thank
And
you.
we'll talk to everyone soon.
Thank you for having me.
Bye.